Good day and welcome to the Q1FY23 earnings conference call of Shalimar Paints Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Rasika Sawant from Orient Capital, Investor Relations Partner. Thank you, and over to you, ma'am.
Thank you, and welcome to the Q1FY23 earnings conference call of Shalimar Paints Limited. Today on this call, we have Mr. Ashok Kumar Gupta, Managing Director, along with senior management team. This conference call may contain forward-looking statements about the company which are based on beliefs, opinions, and expectations as of today. Actual results may differ materially. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. A detailed safe harbor statement is given on page number 2 of company's investor presentation, which has been uploaded on the stock exchange and company's website. With this, I hand over the call to Mr. Ashok Kumar Gupta for his opening remark. Over to you, sir.
Good afternoon, everyone, ladies and gentlemen. It's our pleasure to welcome you to this conference call for Q1 of FY23. With me in this call are Mr. Mohit, who is our CFO, and Mr. Kuldeep, who is our Sales and Marketing Head. We are happy to inform you that there has been growth. My colleague Mohit will give you some of the highlights, financial highlights of this quarter.
Yeah, hi, good evening. Thank you, sir. Thank you very much. Good evening, dear all. Welcome to the call for quarter ending June 22. Thank you for taking out the time to attend this call. I'm happy to share that your company has been progressing and moving in the right direction. During the last quarter, we have reported a revenue of 110 crore with a growth of 4% from the previous quarter, which is Q4 of financial year 22, and 69% from year-on-year quarter 1 previous year. Since Q4 is always a largest month and with the higher sales numbers, previous quarter was in fact more than that number. So we are moving in the right direction with the right track record. It's a remarkable journey so far for us. So this is the highest sales of the Q1 in last 7 to 8 years. If I compare year-on-year Q1 independently, it is the highest sale in the last 7 to 8 years. During the quarter, company has grown in decorative segment by 22% from the previous quarter and 15% in water waste if I talk about the segment of the product from the previous year, same quarter. We have over the last few quarters there has been raw material price increase that has been continuously was increasing, which has protected the gross profit and impacting the overall profitability of the company. We have reported a EBITDA of minus 3.4 crore against 8.9 crore of the last year Q1. Loss before tax is 9.53 crore rupees. And this is an improvement of from 3 crore from the previous quarter and rupees 10 crore from the last year same quarter. So raw material cost is around 73% of the revenue this year. So gross profit is 27.1% almost. Yeah. So I'm handing over the call to Mr. Rana, who is our Director Sales, for more briefing about the market updates.
Okay, great. Thanks, Mohit. So as Mohit said that this has been a good quarter for us. Maybe this was the first quarter in the last 6-8 quarters wherein we have gained the market share. And by now, almost all the paint companies have announced their results. So it is a 0.4% market share gain in our case. And this has been attributed by certain things which have been done in the quarter 1 in terms of distribution expansion, emulsion sales going by our targets. We are still kind of looking at a growth in emulsion targets, emulsion saliency in our portfolio, which we are working upon, and definitely it's going to give us results in times to come also. And also with the new products which were increased, which were launched in the last 8-9 months, that has given us a incremental sale in terms of top line increase, and which has also helped us better bottom line. And I'm sure that in times to come, it's going to be even more better as compared to where we stand today. Yeah.
Thank you, Kuldeep. So as my colleagues Mohit and Kuldeep said, this is a performance for this quarter. Now we would like to invite your questions, please.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The first question is from the line of Darshil Zaveri from Crown Capital. Please go ahead.
Hello, good evening team. Thank you for taking my call. So I just wanted to inquire about when do we see our path back to profitability, in terms of operating profit as well as total bottom line. What is our vision for the next 2-3 years? When do we think we'll be able to break even?
So if you see, we are having a EBITDA loss at this moment. Even though our revenue has grown significantly, there's still some EBITDA loss. Now that EBITDA loss is okay. So if you see the EBITDA today is around 1.8 crores minus for the quarter, which constitutes around a 1.5%. Why this EBITDA loss has taken place? After the war in Russia and Ukraine, there has been a steep rise in oil prices. Oil prices of January versus May, if we see, there has been 30-35% increase, which affects significant number of raw materials. Fortunately, there is a decline in oil prices now, and along with the increase in the oil prices, there was disruption in many of the minerals or in raw material, and those raw materials obviously went down, prices went down. So this 1.5%, 2% or even 3% is a result of increase in the raw material cost. As the raw material prices are easing, we should be back in profit. So it could be Q3, it could be Q4, but very shortly, within this year, we see EBITDA positive results coming up.
Okay. So and what kind of revenue would we be targeting for the full year, sir?
So we are looking at a growth. So if we see, typically our sale, if you see last year it was around 92 crores per quarter, if you take an average number. And in first quarter we see a growth of around 20% over that average. So if we start first quarter with 20% growth, then we will obviously look at a growth more than 20% in balance part of the quarter from that average. So our aim will be that whatever growth we have achieved in the first quarter, we should not be lower than that, we should be more than that. So if 90 crore per quarter was our result last year, our balance quarter should be more than our first quarter. So your growth should obviously be more than whatever we have achieved in the first quarter, which is 21%.
Sorry, sir. You mean growth because last year quarter one we had revenue around 65 crores, which has because it was a COVID quarter. So sorry, you're comparing it with which quarter, sir? Sorry.
So last year as a whole, if you see, we are close to 360 crores.
Correct.
My average per quarter is, I am kind of discounting first quarter, as you said, is COVID. I'm taking an average of last, even if I take 7-8 quarters, average has been around 92 crores. So I'm talking of an average figure if I see on a even 2-year, 3-yearly basis, then having a growth of 20-21% over that quarterly growth. This year, my growth has to be much more than that.
Okay. Yeah. Understood, sir. And sir, what kind of capacity utilization levels currently?
Capacity utilization is pretty low. It's only around 45-50%. It's not even that.
Okay, so we'll have room to grow.
We have significant room to grow. Our basic constraint today is sales. So we have been trying to push up sales. As you know, it's a consumer product. In any consumer product, increasing sale is a tough task. We have a good team. Our colleague, Mr. Kuldeep Rana, has joined us only a few months back, and within this few months, he has shown this kind of growth. I'm sure going forward, as he becomes more tuned to and more experienced, he will be able to show a better growth. So with this, our capacity utilization should also improve. We have enough room in our production facilities to increase production.
Okay, thank you. And if I may, can I ask a few more questions, sir, or do I get back in line?
Your choice. You can ask anytime.
Yeah. So sir, I just want to know what kind of seasonality do we see in our business? I'm assuming Q1 and Q4 will be the best, right?
So typically, my colleague Kuldeep will like to answer this question.
Yeah, so if we talk about the seasonality part, if we look at the second quarter is considered to be a better quarter. See, essentially the season starts 55 days before Diwali. So in terms of the consumption patterns going up, so if we look at between the quarters, so second quarter would be considered as a better quarter in terms of the consumptions going up.
Okay.
Channel filling starts from say July in terms of the basic products get channel filled during July period, and which as I mentioned 55 days before Diwali the consumption starts. 45 days before Diwali it peaks, and 55 days before the movement in the market in terms of channel filling and availability starts.
Okay, thank you. Thank you so much, sir. That answers all the questions. So all the best and looking forward to a brilliant quarter next. Thank you.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Manan Patel from Airavat Capital. Please go ahead.
Thank you for a good opportunity and congratulations for the good quarter, sir. Sir, first question is regarding our ability to pass on the prices while we understand the other players have taken price hike. So I would like to understand how are we doing on that front?
So, our market share in the paint industry is hardly 1%, not even 1%. So the market leaders whose market share is much more, for 40, 50, 60%, we are always in line with them. So if they increase the prices on 1st of any month, let us say 1st of July, we will increase from 1st of July. So our ability is limited to the extent of these market leaders increase the prices. We are not in a position today to increase prices beyond what. Having said that, many times we do operate in the market at marginally higher prices, but that are more exception than rule. So typically we have to follow whatever are the prices being given by the large leaders.
Okay. Sir, it's good to hear that we are able to take the kind of price hikes that they take and still increase the market share. So, sir, second question is you mentioned the RM cost. So there was a disruption in supply and price hikes and all those things. So how do we see our RM costs go from around 72% levels to the market average over a period of time? So how long does it take, or what levels of revenue do you see that happening? Because in general, our RM price is much higher than the competition, right?
You are right. Actually, there are too many reasons for being higher. But see, this 72 seems to be more of an aberration because of the increased oil prices. And as you know, oil prices are slightly easing. I think today it's around $19.95 per barrel. So with that kind of a background, I see that this extreme position will not be there. I see our RMPM going forward should be closer to 70%. That's what we are aiming for. And once that happens, then the whole economics, whole mathematics will change. So I think at the first level, we are looking at decreasing this RMPM from 73 to 70%.
Okay, and that should happen with this lower prices, current prices?
It should happen. But already, as I mentioned to you, oil has come down. It started affecting xylene and other solvents. Even though the impact is limited, as you know, there will be always a lag, but the decline has started. So today, my prices of raw material as compared to my prices in the month of May, June are around 1.5% lower. So if this trend continues even for 2 more months, I think I am there at 70%.
Sir, the next question is related to the second round of funding that we did. So we mentioned in the last call that we wanted to improve capacity and do technology upgradation. So where in that journey are we?
We are planning for it. We already kind of we have a new team leader in terms of the head of the manufacturing, Mr. Rakesh Gupta. He has just joined us some 2 months back, 3 months back maybe, and he is working on technological upgradation and modernization. So he is formulating the plant, he is visiting the plant, he is seeing what are the deficiencies, and then perhaps by next call we would have a firm plan in hand, and if everything goes well, I think we should be able to give you the details of how much we are going to invest, where we are going to invest, which plant, what will we maintain, what capacity increase will happen. All the details will be with you by next call. So we are hoping that within 2.5 months, he will freeze up everything. He has done already a good amount of work in that direction, but at this moment, he has not been able to firm up everything because he has joined a couple of months back only. Next call, we will have all the details frozen up.
Sure, sir. That would be very helpful. And the last question is regarding our partnership. So have we started selling through them, or how is the scale-up going on in that aspect?
So our partnership is progressing very well. It's continuing day to day. So there are two kind of relationship we are having at this moment. One is in marketing of paints. So they already have a very good infrastructure by way of entry into projects, also by way of a retail sale. So they have already started working on the retail part of it, and their sales have started. And so there is the beginning. As you know, they are not paid people. So they are kind of many things they do, but paint was not one of those. So they started paint with us only. So beginning has been good in paint. In addition to paint, we are also coming up in a small way in construction chemical, which is again a part of paint only. But till now, construction chemicals were not being sold by us. And there again, they are also a kind of a user and a reseller of construction chemicals. And there also their sales have started. So in both the areas of construction chemical as well as paints, sales through our partners have started.
Okay. And sir, by what time do we see a significant scale up that it starts showing up on the top line?
See, I think typically it takes around 11-12 months for a person to really pick up pace. It has only been 2-3 months since they started, and already they have done. I won't say they have done a very big job, but some significant numbers have come. So far as balance sheet impact is concerned, I think between 11 to 12 months we should have a very good figure from their side. We expect a good figure from their side.
Great, sir. Very helpful, and all the best.
Thank you.
Thank you. The next question is from the line of Fedora Fernandez from Amplify. Please go ahead.
Hello. Am I audible?
Yes, ma'am.
Okay. Thanks for the opportunity, sir. I have 2 questions. The first one is, does the company have a marketing strategy or any advertisement strategy in place? Like any ad spend that the company is planning to go ahead with? And my second question is, with the crude oil prices cooling off, how are we seeing that this fall can impact our bottom line?
So, ma'am, first question, our marketing director, Mr. Kuldeep, will like to answer, please.
Yeah, sure. Thanks, ma'am. As far as marketing is concerned, two things we want to fix first. We want to expand our distribution because our market reach is very low, and we want to substantially increase our market reach first to be supported with all these marketing initiatives. To start off with, as you know, that paint industry is highly dependent on painter and dealer activation. So what we are going to do is we are doing a lot of activities on the ground, below the line activities, and once our sizable reach is there, when we have a better market penetration, we are going to support it with the other initiatives on the marketing front. As of now, we will be very aggressively going on the BTL activities, which is our plan for the next 3-4 months' time.
Okay, sir.
So marketing, as you said, focusing on BTL, focusing on painters. So we are only trying to kind of handle painters at this moment through BTL activities and to some extent dealers. So far as oil prices are concerned, see, it's an input. An input cost increase has to be passed on to the consumer ultimately. In many industries, consumer industries, it so happens that this cost is not passed on immediately. It takes some time. Fortunately for us, the prices have started coming down, so cost impact will be less. But yes, till the time cost increase is still there, input cost increase is there, and it is not passed on by the leaders, we will have an impact. That impact at this moment is around 6-7%. Going forward, I hope it will be reduced to 5% or so.
Okay, sir. Okay, thank you, sir.
Thank you. The next question is from the line of Navin Ketan from Subnis Financial Services. Please go ahead.
Hello, sir.
Yes, please.
Sir, I had a few questions. Firstly, I wanted to start with decorative versus industrial paints. Sir, in this, when we're seeing the realization, like how we have performed over, the last 1 year, we have grown substantially in like the decorative segment by 35% in volume, and our revenues have increased by 100% over here. So, with comparison to that in the industrial segment, our revenues have just increased 30%, with 23-24% increase in volume. So I just wanted to understand, are we progressing further towards the decorative paint segment and reducing industrial? Or what is the way forward for FY23?
So what happens is that if you see historically, we have been around 30, 35, 37% in industrial and 65% plus minus 2-3% in decorative. I think our ratio has been always maintained. Last year, first quarter was slightly addition because while in the COVID period, industries will be working, the general retail market was not working. So if I see it from the whole year point of view, not from first quarter, whole year point of view, the ratio of industrial to decorative is almost same. Decorative is typically double of industrial. So that ratio is almost maintained. We have no inclination to either increase decorative or industrial substantially more than the other. I think we will try to maintain the ratio in years to come as well.
Okay, so I mean, we are saying that Q1FY23 was a lower base, that's why it is looking like a jump right now.
Yeah.
Okay, and realization-wise, is there any increase in the realization in decorative or industrial, either or?
So, realization-wise, there is a small difference. So, while decorative realization goes in tandem with the market prices being announced by the large players, large two players, so far as industrial is concerned, it is a matter of individual consumer-to-consumer negotiation. And as you know, in any industry, the consumers take time to absorb any cost increase. So here also, our margins have not been as good in the industrial segment because consumers are taking their own time to accept the price increases. So our margins on industrial are slightly affected as compared to decorative. In fact, both are affected, but industrial is slightly more affected. Going forward, as oil prices ease, we again feel that they will come back to the previous levels. Even if they come back to previous levels, on and whole, I think our decorative margins will be better than the industrial. Till the time we really go into very high-end industrial, which will take some time.
Could you highlight the percentage-wise, like what would be?
So if I see, typically margins in industrial will be lower than decorative by 4 to 5%. And this will continue till we go into the very high end of the industrial. We are working on it. Our strategy is that today Shalimar has been able to grasp whatever share we have in industrial by selling low-end products or common products, except a couple of areas like we have got in steel pipes, we have got certain good products. In packaging, we have got certain good products. But on the whole, it's more of a vanilla product. Now going forward, our strategy is to go for higher-end products. When I say higher-end product means in pipeline, we go for something like a gas flow coating, which gives you higher margins. It's a difficult product. Similarly, in every industry, every segment, we'll try to go in for a higher margin product. Once we do that, then the margin in industrial will also improve and maybe equivalent to the decorative.
So when we're saying that we're going to make these higher-end products, are we looking at, do we already have a client base which we have, shortlisted, or do we have any visibility of that?
Well, actually, the good part is clients are almost same. For example, the pipe manufacturer, he is using our products today. He also needs higher-end products. It's only that I have to develop it, do an R&D, do a trial, get the approval, get a certification, and then start. So it's more of my challenge, my internal challenge, my internal R&D and product development challenge, rather than getting customers per se. Customers also have to go get new customers, but many of my existing customers are also requiring high-end products.
Okay. So I'll ask, one thing. You had mentioned in the previous calls about a capex plan of approximately like about 100 to 150 crores. Just wanted to know if we have figured out anything concrete, what to do with it.
Actually, we are in the midst of that. We are almost reaching that figure. But as I mentioned a few minutes back, what has happened is that this needs a lot of detailing. When I say detailing means what facility will come where is the space available, who is the vendor. So those detailing is going on. It may take me another 2 months to detail all that. So by the time we have our next call in next quarter, I think all the details will be over and we will be in a position to say that this is the exact amount we will be spending on this facility, this location, and this is the kind of capacity we will add, or this is the kind of, because we are not only adding capacity, we are spending more on material handling, we are spending more on infrastructure, we are also spending slightly more amount on automation. So these are the things we will be doing, which will ultimately improve my profitability.
And what are we looking at the asset on from this?
Oh, that will be pretty good. My asset turnover will be, because it is all brownfield. As you know, it's not a rocket science. Any brownfield expansion has a better asset turnover ratio.
Okay, sir. Thanks a lot. Sir.
Thank you. Reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Aditya Devra from Devisha Investments. Please go ahead.
Good afternoon, sir.
Good afternoon.
Sir, I'll be taking in, I'll be maybe digging in more from the question of the previous participant regarding the capex part. So, sir, last quarter you had mentioned that you'll be using some portion of the funds that has been raised for improving the efficiency of the plant. So, sir, can you just quantify it? How much would we be spending if you have made any concrete plans by now?
Yeah. So let me slightly elaborate on the subject. See, what do you mean by efficiency of the plant? See, currently the way our plants are set up, the entire handling is manual. So you will have a bag of raw materials coming up, and then you will be charging it in the equipment, and then you will be packing the goods again mostly manually. Now, typically today, most paint plants have automated this process. That means instead of charging manually, you have a hopper where you put all the raw materials together, and then it is picked up automatically by the system, and the packing is done using automatic machines, and then these packings are sent to the warehouses through rollers. So this is the kind of automation which is already there in most plants, but we didn't have it. Whatever capex we will do, I think around 50% will go only for this kind of activity, so that our plant become as efficient as anybody else. It both increases the capacity, increases the output. It also helps in improving the economics for the plant. It reduces the labor cost, it reduces other charges. It also reduces the wastages. So we are planning in such a fashion that our efficiency of the plant is closer to what other players in the industry are doing.
So, sir, at some point of time, would our EBITDA margins would also be similar to other industry players?
That's a slightly long time, because other industry players have been doing a lot of advertisements, lot of branding activities, and that's why they have been able to reach this kind of number. But we have not yet started on that journey. Once we start, it may be a couple of years, but yes, once we do that, maybe a couple of years from now, our EBITDA margins should be almost at level with the industry margins.
Okay, and sir, how much time would we take to complete this capex for improving the efficiency of the plant?
We expect not more than 1.5 to 2 years, entire process A to Z.
Okay, around 24 months. And maybe by that time itself, we might be also targeting to be PAT positive at the company level.
Or maybe before that. We can't afford not to be.
Or maybe before that.
Of course, it has to be before that. We can't afford to be like this anymore, not even another quarter. We have to be right from beginning, start doing it.
Sir, in the last con call, you had mentioned about certain hires you had made for certain verticals in the company. So, what is the feedback? What are we, from here on, what are we adding, apart from maybe the capex part of it and the hiring, what other efforts are we making to improve the efficiency inside the company?
So, I think it's a pretty broad thing, so I'll tell you one by one. So one is capex. The capex is basically for updation of the equipment, modernization, ensuring that the plants are efficient, the output is of good quality, acceptable quality. The second big chunk is supply chain. Now, supply chain plays a very important role. Having produced it, it should reach the customer in the fashion it is produced, without iteration and in time. So we are doing a lot of automation on the supply chain, whereby we are increasing our warehouses, modernizing our warehouses, automating the whole process of warehousing management. The third is our IT structure. So today our IT was pretty, old. So whether we had SAP system or we had our marketing system, we are making a lot of changes in our IT. So I think IT is going to be one of the big pillars of our growth. So apart from this, another big area we are working at is sourcing angle, whereby we are trying to go to the original manufacturer rather than buying from the intermediaries. And here again, automation is going to play a big role. So I think these are 3-4 areas we are focusing. Our capex, modernization of manufacturing facilities, supply chain, and also for operations are concerned. Then and of course HR. I think manpower and R&D. Manpower and R&D are going to be our pillars for future growth. We are expanding our R&D in significant way at our present facility in Nashik, and we already got a good team in R&D, and we are going to further expand it. And as I mentioned to you last time, we have already got a very good team at practically all the functions, and in days to come, this team is almost complete. They are complete now, and in days to come, this team will also start firing. So with this team firing, with a focus on R&D, manufacturing, and supply chain, and IT, I'm sure things will turn around very fast.
Sir, we are more present in maybe tier 2, tier 3 cities. So I have this question: are we seeing any slowdown? Maybe in this quarter, 45 days have gone by for this quarter. So are we seeing any slowdown for this quarter?
My colleague Kuldeep is closer to the tier 2, tier 3 cities, so he will
Sure. So thanks. If we look at in the quarter one, the growth rates as compared to the last year quarters has been equal. It has not kind of come down, so to say. In fact, if we look at tier 2 towns, the consumption patterns towards the premium emulsions has gone up. And our relatively our presence is better in tier 2, tier 3 cities. So, which is going to help us in long run in terms of, because there's a lot of conversion from traditional paints and from distempers to emulsions. And since our focus, as I mentioned, is only emulsions, so probably it's going to help us in times to come.
So, sir, my question is, are we seeing any slowdown in this quarter? In the quarter that is going on? As of now, no. Thank you, sir. Thank you. Thank you for answering the queries.
Thank you. The next question is from the line of Amit, individual investor. Please go ahead. Amit, your line is in talk mode. Please go ahead with your question.
Hello? Hello?
Yes, please go ahead.
Yes, please.
Yeah. Can you hear me?
Yes.
Yeah. So, sir, couple of years back, in the con calls, we used to talk about an aspirational number of 1,000 crores in 3 to 4 years. Of course, COVID came and things are not in, but I understand that. But, where do we stand in that goalpost of ours? That's my first question. And my second question is trying to understand a little bit about this gross margin. Now, if you take, say, the top 2 players in the industry and see the differential gross margin, how much of that comes because of the pricing gap between our products and theirs, as well as the product mix, and the economy of scale, which might be the procurement price related. These are the 2 questions I had. And the third question is regarding the strategic partners. When do you think we will actually be able to dovetail completely in terms of leveraging not only their distribution reach, but also their understanding of the B2B and B2C market? These are 3 questions I have.
Fine. Thanks a lot. Well, goalpost has not changed, but COVID has kind of shifted it. So 2 years have gone in COVID, so our goalpost has accordingly changed. We are in that direction already. So if you see this year, we are making that kind of progress, whereby we should be growing 20-25% over last year, and maybe even more. And so the goalpost only shifts because of whatever reasons have happened, but the goalpost remains same. Your question was about the gross margin. You are right. Our gross margin, typically, if I see from an industry average point of view, should be more by around 7-8%. Now, this 7-8% is on many accounts. One of the main account is on account of the differential in water-based products we manufacture or we sell as compared to our competitors. I think somewhere back also I mentioned that this has earlier Shalimar was known for its solvent-based products. But what has happened in that last 2 years, the solvent prices have gone up higher than the water-based prices. So we have been able to shift our focus. Already our competition is having a very significant portion of their basket in water-based, so far as decorative is concerned. So because of that, our margins are lower as compared to the competition. The second reason is the volume itself. As you know, we always get economics of scale. Their scale is many multiples higher than us, and they obviously get the benefit. Third is the backward integration. We have to buy almost all our raw materials, but inputs rather, not even raw material, inputs we have to buy. But our competition, they have many in-house facilities for manufacturing of these inputs. So there are a couple of more reasons, but I will say that these are some of the reasons which are responsible for this variation. And of course, on the product mix, we are in vanilla kind of products, not so much in highly specialized products. We are also not in wood coatings at this moment. So these are also have impact on our gross margins.
Yeah. Thank you. If I may ask one more question. I have been, attending the con calls for the last 3-4 years. Most of our discussions and themes are as if we are a manufacturing company, into the gross margin and EBITDA margin and asset turn and stuff like that. There are very few discussions that happen as if we are a consumer company in terms of customer engagement, product innovation, new launches, distribution networks and stuff like that. So hopefully, in your next con call, if you can, bring in that element, what exactly we are trying to do. This growth is an outcome, right? So that would be better as a suggestion, if you can touch on that, if not this quarter call.
No, I will cover in this con call itself. I will update you to some extent in this con call itself. See, I think it's a very nice thing you are talking about. We were focusing on manufacturing, on operation part a lot, a couple of months back or a couple of quarters back. And the reason was that if you want to do marketing, if you want to do sales, if you want to take care of customers, your operations have to be good. And yes, we were struggling with them. Today, we have come to a stage where we are not exactly struggling and we have reached a good stage where we are able to service. I think service part has improved a lot. We are almost 90% of the competition level. So a stage has come when we can think of other things. And I'm happy to inform you that in last 1 year, we have made series of new launches. My colleague Kuldeep will give you a runaway of what are the new launches we made, what are the new products we made. And again, you're right that in a consumer company, it has to be engagement with the dealer, engagement with the painter, engagement with the marketing front, with the consumer. So I think I'll also request you to cover these 3 areas, what kind of engagement we are having with the dealers, with the painters, and also what marketing communication we are having with the consumers. So these 4 areas I'll ask him to cover, these new launches, dealers, painters, and consumers.
Sure. And product innovation, if you can touch upon a little bit on the product innovation, that's the key product driver, like you rightly said. The product mix is the key driver for gross margins, right?
After he covers, I will talk on product innovation as well.
Sure. So just to give set the context, basically, if we look at the industry today, we are operating in 75 to 76% of the addressable market. When I'm mentioning about the addressable market, that many paint companies have ventured majorly into wood coating segment. They have ventured into construction chemical, waterproofing segment, and adhesives as well. So these are the kind of categories which are high on margin, and so we currently are not present in this. So our endeavor going forward would be also to touch upon these categories and get into it, and we have already started. Waterproofing will be the first category which we are going to get into very soon, and probably in the next quarter when we meet next time, probably by then we will have already 1 or 2 products launched into that particular segment. And as far as the new products are concerned, see, in terms of the price point wise, category wise kind of penetration, if we look at, so we have say if I have to give you just understanding on that, and on that basically we are if competition has today say 10 variants in a particular category, we have only 2 or 3. So we are also wanting to fill up those gaps where our product gaps are lying. We are going to fill up that also. So we are working on to that. Probably by the year end, we will have most of the categories will have our presence in, and we will have filled up all the white spaces by that time. And whatever white spaces we find at the product level, at the market level, we will have filled up by the year end. And our endeavor is to be present in all the categories which paint industry today is operating in the market with. And also, as I mentioned on the distribution front, we are aggressively moving in terms of expanding our reach. And the moment our reach expands, we will be able to kind of place all these products. So today's challenge is that only C, D, E, F class of dealers dealing with us. And going forward, we as a rule, we have said that we are going to penetrate into A, B, C class also, wherein if we look at these categories, the penetration of these categories is more from A, B, C and Tier 1, Tier 2 towns. So by that time, we'll have our reach also in place. Our market penetration will be better. And so we'll be able to do justice to all of these products which we are going to launch in times to come. So that's how we are planning it going forward.
Yeah. You're talking about product innovation. So there are two areas we are working in. So one is we expanded our R&D, and I'm really quite proud of my R&D. So today, whatever products have been made by our competitors, we have kind of benchmarked our products against them, and I've not been able to communicate to the market per se, but we have observed that our products are a shade better than competition. We have reached that stage. It's a question of communication now, and bigger proof has come from industrial. In industrial, our customers have preferred our product over competition. So I think these two things are coming up, and it takes time. We are getting results. In next couple of months, the results will be even more visible.
Okay. Thank you very much.
Thank you for mentioning about our strategic partner contribution. The contribution already started, as I mentioned, but it will take some 10-11 months to be visible, because it's a learning curve for even them. Paint is a new segment for them. They have never been doing paint earlier. So it's a learning curve. Whether their team has also been starting learning, the dealer also learning. So it will take some maybe 3-4 quarters for them to give results.
Okay, sir. Thank you.
Thank you.
Thank you. The next question is from the line of Manan Patel from Airavat Capital. Please go ahead.
Thank you for the opportunity, sir. My follow-up question is regarding the dealers. So last, I think 1 year back, we had around 3,500 regular dealers. So where are we now on that front?
So, okay, there has been a slight kind of a turnaround in dealers, in the sense that out of the 3,500, we have reduced the number of dealers who were not performing by around 1,500, and we have added in last 4 months how many new dealers?
So our number has increased by at least 500 to 600 dealers in the last quarter, active dealers. And so roughly, if you look at that 20 to 30% increase in dealer participation, what has happened in the last 1 quarter. And as I mentioned, that we are aggressively working on the strategies which can build we can create a better penetration into the marketplace and increase our reach. So we are working on to that, and probably in times to come, we are going to have a better reach, market reach and penetration.
Okay. So just to clarify, 1,000 or 500 dealers were reduced, and 500 to 600 dealers were added. So net would be around 3,000 dealers now. Is that correct?
Yeah, almost around that in terms of active dealers.
Got it. And sir, second question is, I wanted to understand competitive intensity on ground. So a lot of new companies have entered, and obviously we are small. So is there a lot of competition on ground in terms of aggressive pursuit of dealers, or on other terms?
So in my opinion, with more players into the market, probably the size is going to increase and is going to benefit all the players. And since Indian market is very low on paint penetration, probably everybody will get its share going forward. And answering your question, probably with more players, yes, the competition in the marketplace will increase, but so will the market size. In terms of the size of the market will also go up, which is going to benefit everybody.
Okay.
Mr. Patel, does that answer your question?
Yes, that does. Thank you.
Thank you. The next question is from the line of Sunil Shah, individual investor. Please go ahead.
Hello. Sir, I think it's more or less in line with the earlier person who had asked the question on competition intensity. Sir, the big boys are really huge. I missed the answers that you gave. Could you just briefly sum up as to, how would we take it up, and would that change the industry dynamics as well, please?
So I didn't understand exactly what you're looking for.
The competition intensity. I think this is
in paint care, in most of the consumer goods, competition is intense. Paint it is slightly more intense because number of players, even organized players, maybe a dozen or more. And so new players, that is even not considered them. Even existing players are pretty good. So the competition is significant, severe. And that's why the reason that most players work in a similar price range. The prices are not much different. It's a services, it's the communication, it's the marketing, it's your strategies and policies which differentiate. So the competition is intense, and we have to work in that competition. And as the results show, and as Kuldeep was mentioning, I think we have been able to understand the competition and face it as well.
Thank you very much.
Thank you. The next question is from the line of Vaibhav, an individual investor. Please go ahead.
Hi, thank you for taking my questions. So I primarily had two questions. So first, could you help us understand the debt position now after the fund infusion? Have the entire proceeds from the pref and the warrants come in? Why I'm asking this question is that the finance costs have stayed constant in this quarter despite the fund infusion. So could you please provide some details there?
So Vaibhav, thank you for your question. So far, the total funding is concerned from the equity and NCDs that has already been received in March. 25% of the total warrants of 150 crore, that is 37.5, that is we received in April. So out of the total funding, we have passed the amount in FDs, and we are not utilizing our CC limit. However, there are some long-term loans which were existing earlier. So that interest is on account of those term loans as well as convertible debentures cost. The interest is primarily on account of those.
So how should we look at finance costs, say over the next 3 to 4 quarters? Are you planning to, repay that debt and retire those, whatever the debt instruments are? And should there not be some offset coming in the form of interest earnings on these FDs that you've parked your money in?
So overall, interest costs will be limited for few quarters. As soon as we start making our capex plan, perhaps then interest costs will come into play. Currently, our interest costs is only because of two accounts. Slightly on account of the fixed, term loan we have taken, which is not much. And second is, we have taken some OCDs, optionally convertible debentures. We have to pay some interest. So whatever interest costs you are seeing is only account of these two. These two will not go away in the short run because they are on the nature of 2 years or so. For 2 years, they will stay with us. And they will definitely be offset by the FDs we have, and that offset is, I think, being shown separately in other income. Otherwise, this interest cost is only limited.
But even the other income has not seen a very material change. I don't know, I'm misreading something here probably, but those numbers...
1.5 is out of interest cost. So out of this 1.63 other income, 1.5 is around of interest.
Okay. So we, on the revenue front, now we have surely seen an improvement now, given that for 2 quarters in a row we are clocking over 100 crores in revenues. But if we contextualize that against the numbers which the larger players like Asian, Berger, Kansai, and uniformly, across all the three players, despite their, significantly larger base, the kind of sequential and YOY growth that they've shown, we have kind of not kept pace, while I agree that our revenue trajectory has surely improved. Now, on a relative terms, what do you think is the constraining factor for us? And what should we be doing incrementally, to keep pace with, to at least keep pace or probably, surpass these players? And, how should we be looking at the partnership with Infra.Market? So, given the infusion, you've also seen some changes in the board now, and one of the founders of Infra.Market has joined your board. So what kind of management inputs or, the sharing of technology, distribution, sales channels that you're getting from them now?
So a couple of things which you're talking about. So first of all is sales front. Our average sales used to be around 92 crores, and first quarter has seen a growth of about 22%. If I see competition, I think competition may be same level or like a lower level. If I take the average of the all players, average of all the 3-4 players which you mentioned, if I see their annual sales, over their annual sales the growth is 20% ahead. So we are ahead of them. We are not far behind them. So our increase in sale as compared to the average sale of last year versus the increase in sale of competition of large 4 players as compared to the average sale of last year is higher. That's A. So we are not. So that's why my colleague mentioned that there is a small gain in the market share, even though it may be low. It may be because of the lower base also, but there is definitely improvement in the market share per se. The second part you were talking about is about the HELA and about our partner giving us. Their contribution has started coming. It has started coming both by way of direct sales, revenue increase, and also started coming by way of technological inputs. So they already have a very strong team and very strong base in both marketing, in IT, in distribution, retail sales. And these are the areas where they are having a very strong soft skill. Slowly we are trying to learn from them and invite them in this company. So we are upgrading our IT, we are upgrading our technology sector, we are upgrading our marketing. We just started, we have not been doing anything. My colleague mentioned something we are doing for the painters, we are doing something on the BTL. So these all activities we are having interaction with them and working with them.
Understood. And my last question. So, how should we be looking at break-even EBITDA now? I understand it will be very dynamic, given all your raw material cost movement and whatever we are seeing on the input costs globally. But if we were to keep costs at where they were on an average level for the quarter, where should we be looking at? What should be the break-even revenues for you now?
So if my revenues are there, stay where they are in first quarter, that's 110 crores. And if my raw materials comes down even by 3-4%, which already started coming down, the downward trend has started, we should be in EBITDA plus category.
And that should naturally mean you should also be PAT positive, given that there is very limited impact of interest cost on a net basis going forward.
You are right. Our interest cost should be very limited. So that should mean that we are in that positive category, green category.
And so you're going to make cash profit because anyway DNA is non-cash item, so anyways, cheap.
Yes.
All right. Thank you. Thank you so much and all the very best. Thanks.
Thank you. Thank you.
Thank you. As there are no further questions from the participants, I now hand the conference over to Mr. Ashok Kumar Gupta for closing comments.
So I must once again thank all the participants. I know you have been having a lot of patience, and it is not at all right on our part to promise so many things and still, keep on delaying it. Few things have happened beyond our control. One was, of course, COVID, and second was this oil spurt. I think we have been able to handle both of them to some degree, but not to the degree where we will be profitable. That's our goal now. But more than profitability, we are also looking at market expansion, because any company which is growing has to look at market expansion as a priority, and along with that has to look at profitability. At both of them, priority being given to market expansion. So having said that, I am sure, we are hopeful rather, that very shortly you will see both of them happening. With these few words, I must thank you, my colleague Mohit, my colleague Kuldeep, for the excellent inputs they are given. Thank you once again to all of you.
Thank you. Thank you very much.
Thank you. Ladies and gentlemen, on behalf of Shalimar Paints Limited, that concludes this conference call. Thank you for joining us, and you may now disconnect your lines.